Hello, everyone. Mark here at TSLA. Tesla closed up today, closing at $290.38, which translates to 3.2%. And more importantly, Tesla this weekend released the first image of the first Cybertruck produced off the factory line over in Giga, Texas. So amazing news. And people weren't expecting that, obviously, because the bullishness, you could feel it over the weekend. People were amped up. This thing was released at 4 o'clock in the morning or something like that, super early on Saturday morning. Really weird, but very much welcomed. And of course, the stock closed up because of that. Now, it really actually means a lot more because in relation to other portions of the sector, of the car sector, it actually outperformed by hundreds of percent. So before we dive into the price action, let's look at the Tesla news that came out this weekend. And of course, that news is going to be, first things first, the Cybertruck reveal, the first production Cybertruck reveal. The other Cybertrucks that you see, on Twitter with the camouflage and stuff like that, most likely that was either made over in Austin or it was made one-off somewhere in a factory there in Texas. But most likely they were just set up over in the temporary tent in Fremont. So we have the crew working at the production line for the Cybertruck. So you can tell this is hundreds of people that are all trained and ready to go, hopefully, and start ramping the truck up. Now, we first things first, we know that ramping a vehicle is really hard because we're seeing the other manufacturers struggle, okay, to really get to the volume where they can start, reducing their costs and passing that on to their customers. We know that the trucks for Ford and GM and Rivian are very, very expensive. And we know they're losing money on all of them. So I think that from off the bat, Elon should be making money on every Cybertruck made. That's the goal. And also, we need to start pumping them out to the tune of, hopefully by the end of this year, we can get maybe 50, 75,000 created. I know that might be a really tall order because you have to flesh out the supply chain, make sure it's resilient, and make sure everyone that's doing the production is doing it efficiently and safely. So that could take a while to ramp, and maybe there's going to be a shortage of batteries. I know battery ramping is very difficult. We've heard a lot of people talk about it from the CEOs of different companies. Batteries are very difficult. It sounds simple, but it's not. But let's look at the first production vehicle, first production Cybertruck roll off the assembly line out into the holding lot. So this is a tweet from Gregor Truck on Twitter, and you can see after that Model Y came out of the factory, we have the first Cybertruck that's rolling off that assembly line. Fantastic. It's incredible. I really wish it was a higher quality video so we can see how the gaps, how even or uneven the gap spacing is on these Cybertrucks. But who cares? They look amazing. They're like a Monet from a distance. They're beautiful up close. We don't know. Speaking about, we were just talking about pricing and other manufacturers losing money on every truck they make and every SUV they make that's an EV. This was a very interesting tweet that came early this morning from Elon Musk commenting about the Ford Lightning being drastically reduced in price off of the news of the Cybertruck being released. Ford Lightnings have anywhere, depending on trim, have anywhere from $6,000 to $10,000 slash off their retail price. And we know that, number one, Ford is not making any money on these cars. They're losing hundreds of thousands of dollars per vehicle sold that's an EV. And these EVs, from what we read on Twitter from Car Dealership Guy last week, we know that these Lightning EVs are not moving off the dealership lots. And some of them are there for months or a year. They're not moving. They're too expensive. And they just don't have that cachet that it is to be a Tesla. So Elon goes on to say, the Ford Lightning is a good vehicle, just somewhat expensive, especially given the high interest rates these days for any kind of loan. And so what does that mean? This could easily mean that a Ford EV that's priced at $60,000 is just too expensive. What does that mean for the Cybertruck? That could easily mean a Cybertruck entry level, maybe $50,000. High, mid-tier, maybe we see the mid-tier, the $60,000 to $69,000 range. So they can mostly get the tax credit from the Inflation Reduction Act. that would be a big boon. And if it is that price competitive, and if they're still making money on the Cybertruck, a decent margin, then you're going to see the stock respond incredibly well. Just because what it really means of capturing a large pickup market share. I know Jim Farley from Ford is talking about, Ford makes trucks for real working people, and people who would buy the Cybertruck are like yuppie, Silicon Valley white collar types. I think that idea will be challenged severely, and I think that they will pay dearly for their hubris over there in legacy Autoland. Let's take a look at their stock. So Ford sold off 6% today on the news that the Cybertruck came out, and to be more competitive with the Cybertruck, they reduced costs by thousands and thousands of dollars. Remember when Elon was cutting pricing on the 3s and the Ys? People were lambasting him, saying he's obviously desperate to sell these cars. Well, I hope they're applying the same idea that Ford is desperate to sell these cars, because all that we know, though, is that Elon makes money at least on the cars that he sells. And secondly, they sell more than any other car in the world. Ford can't say the same right now, other than the fact that their pickup trucks are number one selling vehicles in America. But what if their pickup trucks face competition from a car that's cheaper and more superior in every respect when it comes from the software, when it comes to the maintenance? But Ford's not the only one in the bucket. The GM stock is down 3.1%. Now, GM, we know that they're not making any money on their cars either, on their EVs either. They're ending production on their Bolt, their small car. They're also trying to sell Hummer EVs and the Silverado. These things cost crazy amounts of money for what most likely would be inferior performance when it comes to range. We saw a screenshot. I don't know where I saw it. It was like weeks ago, of the heads-up display for the Cybertruck, and it showed the max range on that particular type of Cybertruck, and we don't know what it was, but we saw the max range at 600 miles for the charge. And if it can be really competitive on range at that price point, a price point just lower than any of the other legacy auto EV trucks and SUVs, then they're going to get blown out of the water. And I think this price action for their stocks kind of lends credence to that idea. People are getting out in large numbers. What about a startup EV? So someone that isn't legacy auto, and the obvious comparison is Rivian. Rivian is down 3.34%. Because we know that they make trucks and SUVs that are EV, but we know also they're not making any money on them. They apparently are saying they can ramp and triple their numbers in production, but even if they triple their numbers in production, I think Cybertruck will outproduce them for the rest of the year. Will outproduce Rivian's whole year number, and sell every single one of them in record time. They're not going to be sitting on a lot anywhere. They'll be sold immediately. Now, there's going to be some growing pains with Cybertruck. Just prepare for recalls and things like that. But this is the start of a whole new kind of secular bull market for Tesla, perhaps. If it breaks above the downward trend line, you're going to see... just think about this first. We have Apple at all-time highs. We have Microsoft at all-time highs. We have Meta a couple percentage points away from all-time highs. We have NVIDIA 4,000% above their all-time high from last year or 2 years ago. So the reality is Tesla's down like 40%. And we'll look at the charts and we'll just be doubly sure. Let's switch over to the chart now and take a look at what we're dealing with when it comes to price action. So I modified the drawing a little bit, but I kept the trend lines the same. I just changed the trend line's color to white to contrast with the drawing. But as you can see here, that trend line, which is the diagonal, which is a big downward trend line, and of course the horizontal, which is what I was saying basically that 290 would be kind of the short-term high that would be hard to breach, and kind of is true. So the morning started off really bullish, where it opened at 292 and sold off very quickly. It sold off a good amount within the first hour or so. That's 1.75%. And it makes sense so, because being above both trend lines, people are basically, what is a trend line? People are just using it as a quick reference point where they want to take profit. So if they're swinging Tesla shares, they just have an order set up for 290. If it's at 290, just sell. And they put it good till canceled, so it's always sitting there every day. And when the market opens, It just sells off. And after the first sell off at 290 or 291 or 292, it creates a slight cascading effect where people are trying to sell, thinking that the stock would go down even further. But it found a base here around 286 and kind of ranged there for a couple hours and got bought up really nicely on these big candles into the close. And it's sitting perfectly. And I didn't touch these. I did not touch the trend lines. It's sitting perfectly here at the intersection of the horizontal line, that 290 that we're thinking about being the max height, the max price for our short-term ranging, and then the downward trend line. Let's zoom out on time frame so we can see firstly where that downward trend line looks like and what that downward trend line is about. It's essentially the pricing from the all-time high, which is November 2021, around $415 a share. And if you should draw a diagonal line for the three high peaks from December 21, April 22, that pricing never went above this trend line until now. It's the first time we peaked above it a little bit, very briefly for that first hour of today, but we're there. And we anticipated this. We talked about how it'll end up at that intersection before earnings. We talked about how there's an inverse head and shoulders here. And we're talking about what kind of reaction, and let's look at the reaction. What type of reaction can we expect from earnings? Well, it's obviously going to go two ways. It's going to go either up or down. Let's go into a smaller time frame real quick, and then we can zoom back out and look at some indicators. So this is my drawing for what could possibly happen over the next couple of days. So since we're at the trend line now, both trend lines essentially, something's got to happen. Do you have enough momentum to push pricing over the trend line? And it needs to de-risk. So there's a natural de-risking before an earnings where people sell their stock because they don't want to hold it into earnings. They want to buy on good news. They want to buy or sell on good news, basically because you want to sell the highest you can get it for, right? What if the earnings turns out really bad? The stock can easily drop 10% in the after hours on Wednesday, depending on maybe like bad margin or what have you. So what could tomorrow look like? So earnings is on Wednesday. So let's say we have two full trading days. We have all tomorrow and all of Wednesday to figure that out. It's very possible that you kind of have this peak above, get to 294, sell off, or you start off tomorrow with a sell. The whole market is red. Maybe a good what could a good catalyst for a sell-off be market-wide is that there are a lot of banks reporting tomorrow. Regional banks and big nationwide banks that can kind of send indices lower, which will drag down Tesla because Tesla's a part of the indices like the S&P 500 and the NASDAQ. So if they sell, every component sells, and you can kind of see this retreat retreat in pricing. Where would pricing stop? Obviously I think a gap fill at 281, the gap. But to fill that gap on the bullishness of the Cybertruck, at least, I think that would be very difficult to go that low. Like that would be just like retracing the whole move, basically. That would be a 3% move. So it could be like if you see a sell because of some macro issue tomorrow from banks, just try to find a base at an intraday low around 285 and then look to 281. And it could look something like this for earnings, where it's a sell off all day. And on Wednesday itself, you see it get back to the trend line. Okay, what if it's bullish? You peak above, you sell off to the trend line by Wednesday's close. And that way, it's always sitting on the trend line, ready to break either direction, right? Like that makes sense to people that, maybe technicians. They're looking for that. They want there to be some type of indecision where it's not easy for you to go long and it's not easy for you to go short necessarily because it looks like it's going to break either way. So let's look at some large time frames. We'll go back to the day and let's look to see our indicators if we're being overbought on some indicators. And on the day, on the day, it looks like we're pretty overbought on the daily chart. The RSI is sitting pretty high. Stochastic RSI is sitting pretty high. RSI is sitting pretty high. But the MACD just curled over and curled around and it's coming up, and we have some room on a bigger time frame. Let's look at some bigger time frames then. Let's look at a weekly time frame. And on the weekly, it looks pretty bought up and pretty toppy. But being toppy doesn't really mean anything because this is toppy back here. and it went on to bull for 2 weeks, right? So we don't know if that's really that toppy, but it just looks it for now. But the MACD has more room to the upside. You can see this come out, and just kind of based off these sloping blue lines here, you can maybe see on a good case scenario a couple weeks of bullishness. How about on a monthly? The monthlies are really telling, not just on Tesla, but also on the S&P 500. You're seeing it curl around. You can see how oversold this was for a very long time, and it's curling around. RSI supports that as well. It's coming up. It's been oversold severely, and RSI is crossing over. And this is all pretty good news on a big time frame. So there is a possibility that we can see some upwards movement on good news, and upwards movement that'll be pretty severe. Now, I would say, and we're going to look at this tomorrow and on Wednesday when more options are being bought, I want to show you guys some volume of what the put floor would be, meaning the lower price would be for this weekend, what the higher price would be. Because based off options, and options really drive a lot right now, because that's the type of thing that market makers can make money on, selling options to people like you and me. They need to control the pricing. They can't let it get out of hand or they'll lose too much money. So we'll see where the calls are piling up, and that'll be kind of your short-term cap on pricing. And reverse of that, where puts are coming, and that'll be the floor. But so assume for now that though we want a big move for this week, I just don't see it happening if there's too many options that are very close to the current strike price. But let's see how the next 2 days evolves with price action. That will really affect the puts. But if we go up, where do we go? The obvious answer here is just to simply moving to the top of the range from last year. And if we're sitting on this intersection of the trend line, let's measure out to the top of that range. That would be an 8% move. And you can do an 8% move in one day. But it just really depends if there's too many calls that's sitting at 310 or 300 or 315. It might not be possible. What about just, maybe to the middle of the range, kind of at this peak in August, maybe we can get like a 3%, 4% move. That'd be around a 4% move. And this is what I mean. Basically from movement from Thursday and Friday. So after earnings, there's full day trading on Thursday and Friday. There might not be the movement that we want it to be, but this seems like the upper limits for short-term Tesla. That kind of, if it bounces off the trend line and you want it to bull up more, it just might take a couple weeks to kind of get there. We'll see though. Maybe it just moves 20% in one day. That'll be amazing. Unlikely, but amazing. So what if it sells off? Where would it find put floors? And the put floors would simply be kind of just gap fills. So the first gap fill, of course, would be the gap fill from Cybertruck news, which would be a 3% move down to 281, and then 7% move down to a gap during the head and shoulders when it gapped up above. And we have more gaps here at 10% down and 11% down. So you can see how it's really set up to really go maybe 10% either way. But Tesla likes to disappoint on earnings. And the reason why Tesla disappoints is really about options holders are disappointed because there's so much retail interest in Tesla options that market makers have a very vested reason to keep price very not volatile. Even though options are pricing in a 10% move, it really disappoints a lot of the time where it doesn't do that move. What could happen if it goes up or down? Let's say it moves 6% by the morning of Thursday, and then it does a very slow grind in the direction that you wanted it to go, but the grind is so slow that you're just burning theta the whole time, and it becomes a very worthless option that you're holding, unfortunately. So even if it goes your way, the way they manipulate the pricing to be very lackadaisical, it doesn't do big jumping moves intraday. It gets kind of hard to make money on Tesla options. Let's go macro real quick and just kind of look at the S&P 500's monthly chart. And you can see here that it's kind of doing what Tesla's doing on the bigger time frame, where it's kind of curling over on the MACD, RSI, and the stochastic. It has very similar looks to Tesla. And that's pretty bullish because every time it does cross over, it gets pretty bullish. It gets pretty bullish, and the bullishness can stay for a while. It's been sold dramatically for 2 years, so it's bound to come back. But the time frame on these big multi time frames, it can mean weeks. It could be 4 or 8 weeks before you see the move that you're really wanting to see. So if you're doing options, and I know it's hard to afford Tesla options, they're very expensive, long dated due to the IV implied volatility that's being juiced up for earnings. So time is really important because it gets you a little bit more leeway for the pricing to work out. But even when you buy big time, the IV crush after earnings could really make them worthless. So just be really, really careful. It's always better to sell options, not financial advice, but it's easier to sell options. It's better and more lucrative to sell options around now for earnings for particular stocks instead of buying them. Because you can probably just look at them. You know how expensive they are. So just be really, really careful. If there's other ways to trade Tesla if you're very bullish. There's ETFs and there's inverse shares that can kind of get you the type of movement or take advantage of movement you think will happen without having to pay the premium for options. So it's easy to short and it's easy to long now. You just be really, really careful if you buy calls or if you buy puts. So thanks so much for listening, guys. I'm really happy that the Cybertruck is coming out very soon, and I'm happy that Tesla's up again. So let's pray for a good next 2 business days or 2 trading days and to see Tesla get up to $300 something a share. Thanks so much, guys, and have a great night. Bye.